Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So welcome to Q4. Q3 was a down one as was predicted by the previous quarters. Again, Q1, Q3 bad, Q2, Q4 good historically. I still expect that to be the case, even though obviously Q4 didn't start with a massive banger. Q1 has been down probably because of tax reasons, among other things, and I think that'll be the case again this year. I wrote an article on Q3 review, a bunch of interesting data. Check it out. I'm not going to go over it here, but one of the most interesting things that I haven't really seen many people talk about is the ETH quarterly price changes. Not a lot of data here, but the modes of gains and losses for ETH have kind of been like two notes. It's either been minus 40% or plus 10, plus 100, plus 500%. It's not really been like all over the map as far as percentages here. So if we do have a positive quarter, which historically Q4 has been the worst quarter for ETH, but if we do have a positive quarter, it's either going to be 10%, 100%, 500%. Odds are it's going to be 10%. That's just historically what most of these have been. So check this article out. I'll leave it in the description below the video. Let's look at the total market cap. Now, in a vacuum, you might hear me say this a lot in this video because in a vacuum, things look ultra bearish. We have the death cross. We're below 200 on the daily. So this is the total market cap, including alts and Bitcoin. Everything's melting on the USD pairs for the most part, collectively. So if I'm looking at this, irrespective of what it is, I'm thinking to myself, there's no way I'm going to touch this right now. No way, just based on the death cross, where it's consolidating. You could argue there's a W forming. We'll see that on BTC as well. But just as is, this doesn't look good. It's certainly, way different than bouncing on the 50 or, a bull cross, breaking the 200. It's basically doing the opposite of what it did in Q2. Looking at the CME stuff, no surprise that we sort of collapsed a few days before the rollover. The triangle was sort of coming to an end either way, and it was probably the final apple on the cart to sort of push momentum in one direction or the other. Even leading the week before that, it was just constant slow bleed. We had a nice candle, a nice dragonfly, but couldn't make a higher high, basically. And that was all she wrote. So we broke down a few days before the rollover and kind of just been sideways. It's kind of like an hour of down, and then it's just been Chop City, USA here. The CME chart looks a lot different than the other spot exchanges. This is the 200 and the 50 again. And you can see we're sort of Wing just on or slightly below the 200 here. So to me, it looks much better on the CME chart than it does on spot, just because of how far down we are from the 200 on the spot exchanges. Again, I'm not like ultra bullish when I look at this, right? In a vacuum, below the 200, EMA is pointing down. You can see the large gap here in, you don't need VPVR or anything. Volume, ideally, it's probably going to go to 6.5 just in a vacuum looking at this. Looking at the index, the BLX, again, we had this triangle, broke down. Okay, sure. Didn't make a higher high, broke the 200. Now we're just sort of in this range. There's an argument to be made for Wyckoff accumulation, but again, you can't sit here and lie to yourself and say, like, this looks uber bullish right now, or, I'm just going to load the boat here. So you got to think to yourself, if we break down, am I going to be ready for that? I don't think there's a trade to be made unless we break 7.7 or 8.5. Unless we break the range, what are you doing? You're just getting chopped up, really. 850, 8050 is like the yearly pivot. So again, there's sort of levels here. On the way up, we consolidated pretty heavily for a couple months around the yearly pivot. So maybe we consolidate for a couple months again on the way down. I don't know. The measured move for the triangle is low, all the way back to 4.5 basically. 5.8 would be the 1.618. And if we break 7.7, I don't see why we can't just keep going. I don't see a fundamental reason for the down move continuation. On-chain stuff is soft. miners would have to capitulate again, basically, for us to really get push. This is different than the 6.5 drop to 3K in that miners got pretty heavily squeezed on that move for capitulation. And there was, Tether stuff, there was BCH Civil War, yada, yada. But, those things aren't exactly here now. You could argue that Tether and Bitfinex stuff is happening, whatever legal garbage is going on. But in general, I don't think the picture macro crypto wise is as bearish as it was on that 6.5 break. So really, watch the range. That's what I'm doing. Just like watching this consolidation, just another consolidation to watch. And again, we're pretty far down below the 200 here. It's another key level. If we hold the yearly pivot, if we hold the 200, if we retest 9.4, then we can talk about going up. But right now, doesn't look great. Doesn't look massively bearish. I think we're going to need to consolidate a little bit more before we drop, if we do. But even looking at this volume profile here, it's the next level is 6.5, right? Obviously, we didn't do anything on the way up. It didn't even acknowledge 6.5 really. Just went straight up. Would not want to see that on the way down. So ideally, if we do go to 6.5, we like V bottom, massive wick, bounce back to the yearly pivot. But the other thing I'm looking at is the Kijun. We're pretty far away. Historically, minus 35% has been like what's tolerated, minus 35, minus 60. That's around 6.5 is minus 35% away from this red line, the Kijun here. But again, similar to the 200 or below the cloud, everything on the cloud is bearish. Nothing on the daily cloud is telling you to buy here in a vacuum. This does not look good. This looks similar to, all these periods where it's just like, okay, we're bearish now. Now we may retest the Kijun here like we did at 10K. I think that was over there. This will be like, maybe that was 12K. This will be like 9.8 or something, whatever that is. That'll be the next key thing. There certainly aren't any massively bearish patterns that we're forming. You could argue like a bear flag just because it's a tight sideways consolidation. The macro pitchfork also suggesting, the next support down is 6.5. The good news is, if you believe in the pitchfork, that the bottom has been this turquoise zone, aquamarine, if you will. But we may get the similar massively overly bearish as we had massively overly bullish here and just like go nuts. But historically, over the past 6 years, whatever it is, this yellow line has been true north, baby. So that'll continue to be the case. Ideally, should we, overly drop here. Just another way to look at the skin the cat, looking at low time frame EMAs, basically the 5, 8, and the 13 alligator Williams. It called the short on that failed dragonfly candlestick break wick. That's not rocket science. We broke the triangle at that point as well. And now it's just saying, if you're short, you're stopped out above 8.5. If you're short, you're adding at 7.7. That's, again, not rocket science, just the range. But it's a way to like automatically see that without any subjectivity. Looking at ETH, I think the USD chart doesn't look great on spot exchanges as far as like anything that's massively bullish. It's certainly less bearish than BTC is, just because it's, you can see that the TK lines are converging here. This is keying in for end to short. That's what it's saying. It's teeing up for an edge to edge from 180 to 255, let's say. Lining up with a hard fork, DevCon, blah, blah, blah. You can insert narrative here. But it definitely looks better than BTC does. And you can see that on the ETH BTC pair as well. A lot of BTC pairs actually look really good here. Whether or not they'll all work out as they are expected on the daily cloud, you're seeing massive edge-to-edge stuff on the daily cloud. ZRX is one that's actually already panned out. EOS, XRP, all these look really good on daily as far as the bottom is in. ETH BTC is setting up for this massive invert head and shoulders ascending triangle. This, if you'll remember, was a massive failed diamond bottom. So it broke down, and now you're getting a 5,200 12-hour cross. It's probably one of the more bullish charts in crypto right now. But again, if you're thinking back to this, and I'm thinking, oh geez, Rick, This doesn't look good. All right, that's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.